Have you ever wondered why Dave Lee remains a Tesla bull despite recent performance in the stock market and not meeting the numbers for production? Some investors remain bullish on Tesla stock. Stay tuned and keep watching to find out why Dave Lee remains a Tesla bull. The only thing common between Tesla fans and Tesla critics is their interest in Tesla. While fans desperately hope for its success, critics point out reasons why it will not succeed. Still, some people remain firm in their belief in the EV company's potential. Being a market leader in the electric vehicle industry is not something that can be easily brushed off. Today, Dave Lee reveals why he is extremely bullish on Tesla stock as an investor and YouTube content creator. Dave Lee is extremely bullish on Tesla stock this year for 4 reasons. The first is the EEV tax credit. The second is the Optimus robot. The third is the Q2 and Q3 volume increase. And lastly is the upcoming and much anticipated Tesla stock split. Dave Lee is a known YouTube content creator who shares his thoughts on the vision and reason to invest, what is not taught at school about investing, and the mind-boggling power of assets to work and grow. Lee remains bullish on Tesla stocks and constantly says that he is in this venture for the long haul. He added that he firmly believes that Tesla will see spectacular growth by 2030. It can be noted that Lee previously posted how he raised his initial Tesla stock capital for about 100 times their actual worth. He shared that when he originally bought Tesla stock, he expected it to expand 10x from $3 billion to $40 billion in market capitalization. Now, the first reason for his bullish stance on Tesla is due to the recently passed EV tax credit, which is part of the Inflation Reduction Act of 2022 that President Biden will sign into law. The bill, called the Inflation Reduction Act of 2022, is said to make a historic down payment on deficit reduction to fight inflation, invest in domestic energy production and manufacturing, and reduce carbon emissions by roughly 40% by 2030. This bill, when eventually passed into law, may well create a big demand for EVs. According to the bill, there will be a $7,500 tax credit for new electric vehicles and a $4,000 tax credit for used electric vehicles, with several factors and requirements to be considered. The income requirements for new electric vehicles, if you're a joint filer for less than $300,000 and then $150,000 as a single filer for used vehicles, the income requirements are $150,000 for joint filers and up to $75,000 for single filers. There are also corresponding price requirements for EVs. If the EV is an SUV, pickup, or van, it can be priced up to $80,000. Cars or EVs above that price do not qualify for these EV tax credits for smaller vehicles. It is up to $55,000 in price for used EVs. It is applicable only for EVs up to $25,000 in price, given that the used vehicles were sold by a dealer. This EV tax credit can only be used the first time the car is resold. Several more aspects are interesting for the EV sector. One of them is that a certain percentage of the battery components by value must be manufactured or assembled in the U.S. before 2024. The volume of battery components that need to be manufactured or assembled in the U.S. starts at 50 and will eventually go up to 100% to qualify for at least half of the tax credit. On the other hand, the other half of the tax credit is regarding battery minerals. A certain percentage of battery minerals must come from a country the U.S. has a free trade agreement with or must be recycled in North America. The target would be 40 in 2023, 50 in 2024, 60 in 2025, 70 in 2026, and so on. Moreover, there are certain restrictions imposed against any and all battery metals or components coming from entities of concern. Dave Lee believes that Tesla is the best automaker positioned to take advantage of the EV tax credits. He said Tesla already has strong demand. They are the clear market leader, and it's taking them many years to build up their product, their lineup, their offerings, their supercharger network, and their whole experience. Lee said that Tesla has the most experience in large-scale EV production among its competitors, and he believes that through the EV tax credits, Tesla will witness an increase in revenues as well as in margins and profits. Are you a Tesla bull or a bear? Let us know in the comments section below. Another reason for Lee's bullish stance on Tesla is due to the humanoid robot Optimus in an article titled "Believe in Tech: Creating a Better Future by Tesla?" CEO Elon Musk, he said the Tesla bots are initially positioned to replace people in repetitive, boring, and dangerous tasks. But the vision is for them to serve millions of households, implying mass production of the said humanoid robots. Musk said, "We plan to launch the first prototype of a humanoid robot this year and focus on improving the intelligence of that robot and solving a problem of large-scale production." He also said that a humanoid robot's usefulness will increase annually as production scales and costs fall. Musk added that a home robot may be less expensive than a car in the future, and that people will be able to buy a robot as a gift for their parents in less than a decade. Musk said it is foreseeable that with the power of robots, we will create an era of extreme abundance and goods and services where everyone can live a life of abundance. Perhaps the only scarcity that will exist in the future is for us to create ourselves as humans. Lee thinks that through this article, Musk is exhibiting his laser focus and that he is showing two major things. One, he's saying that with the humanoid robot referred to as Optimus, they are going to focus on improving intelligence. The second is that they are going to focus on bringing down costs largely through large-scale production. According to Lee, this may actually be great news. He said this is the exact formula that Elon Musk has used many times in the past to create multi-billion, multi-trillion-dollar markets, for example, with electric vehicles. That's exactly what Elon did. He improved the product, and all along, he brought down the cost by bringing production. Lee called it the Elon Musk approach, where you improve a product through ruthless engineering and innovation, all the while bringing down the cost through a whole myriad of cost-cutting measures that can be made by increasing production and increasing manufacturing efficiencies. Aside from this, Lee said that Elon brings together the most talented people possible and gives them super aggressive goals. Lee said that Musk gives them the key, which is to innovate by engineering, and by improving the product and lowering costs, he gets the result he expects, which is product dominance. Lee thinks that the Optimus robot can be the most valuable product ever, both by Tesla and in history. Moving forward, another reason for Lee's bullish stance on Tesla is the anticipated increase in quarters 3 and 4 production and delivery numbers. Lee said, "When I look at my Q4 projections, I'm looking at over $25 billion in revenue just for that quarter. That's a $100 billion annual run rate and a 20-plus operating margin." He also said that, in a way, Tesla is entering a sweet spot where they're scaling factories as the company continues to grow its model sales, as well as increase their deliveries and revenues. According to Lee, Tesla is showing more operating leverage, which is going to be more apparent in the next few quarters. He said, "We have demand that's increasing because of the electric vehicle adoption curve. We have these new EV tax credits, and all the while Tesla is improving their FSD beta, which will lead to a greater auction uptake, and all of these will lead to growing margins." The last reason for Dave Lee's bullish stance on Tesla is because of the much-anticipated stock split in a few more days. In the recent shareholders meeting, Tesla shareholders voted on a proposed 3-for-1 stock split and approved it with a strong majority, over 815 million shares for and just under 9 million shares against the company that announced that it is moving forward with its 3-for-1 stock split, and the stock dividend is coming on August 24th. Tesla's board issued a press release to announce that the stock split will take place on August 24th for all shareholders of record on August 17th. According to Lee, this doesn't change the fundamental value of Tesla, but instead shows something in the bigger picture. It shows that a stock price will reward a great business model. He said that Tesla comes up with the best product in the auto market and that they have growing revenues, great margins, and profit, and this is being rewarded by a stock price that increases over time. What's interesting is that Tesla is doing this in an auto market that's been largely discounted as low margin, high capital intensity, and very cyclical, says Lee. Make sure to visit our channel and watch our other videos for more of this content.